Good morning, my dear friend. Welcome to the program Gyan Se Kalyan. Today we are going to discuss very important part in accounting, that is adjustment. There are certain items which require adjustments for making final accounts. Because of the facts we all know, there are some errors, some mistakes, some transfer, etc. that is required for preparation of account. So now enjoy accounting. So here first question is need for adjustment. Why we are doing adjustment? So the revenue to be considered on odd basis and not on receipts basis, and the expenses be considered on incurred basis and not on the paid basis. Here is the important clue. The items which usually need adjustment are closing stock, outstanding expenses, prepaid, unexpired expenses, accrued income. Likewise, here some example I have given. So these all items are required adjustment for finalization of account. So next very important one is manager's commission. In a big organization, a manager is provided commission. So the manager of a business is sometimes given the commission on the net profit of the company. This is a very important adjustment. The percentage of the commission is applied on the profit either before charging such commission or after charging such commission. In the absence of any information, it is assumed that commission is allowed as a percentage of net profit before charging such commission. Suppose the net profit of a business is rupees 110 before charging commission. So the commission will simply be calculated 110 into 10 divided by 100, that is 11. So this is a very small explanation of manager commission. And what are the difference between capital expenditure and revenue expenditure? This is again very important. So revenue expenditure are taken in trading and profit and loss account, and the balance sheet is taken in the capital expenditure is taken on the balance sheet. So distinction is very important so that our account will be prepared correctly. Another, what is outstanding expenses? When expenses of an accounting period remain unpaid at the end of the accounting period, they are termed as outstanding expenses. They should be duly charged against revenue for computing the correct amount of profit or loss. The outstanding expenses is added to the total expenses under the particular head for purpose of preparing trading account. Here one example is given, wages, and we are adding the outstanding wages. Another is prepaid expenses, the items of expenses which are paid in advance, the portion of expenses which is carried forward to the next year and is termed as prepaid expenses. The amount of prepaid part is deducted from the total particular expenses. So here a very simple example is provided to understand it better. Here salary and then less prepaid salary. So another financial statement. So my dear friend, we all know basically there are three financial statement, that is the financial performance. Under this we are preparing trading and profit and loss account, and financial position. Under this we are preparing the balance sheet. The next, here very small example of the balance sheet is given. So you read it, understand it, and try your best. Another is what is accrued income, income earned during the current accounting year but not been actually received by the end of the same year. Such income are known as accrued income. So here, what is gross profit? The gross profit, sales minus purchase plus direct expenses. What is net profit? Net profit is gross profit plus other income minus indirect expenses. Welcome back. Next, item is accrued income. The amount of accrued income will be added to the related income in the profit and loss account. So here one very simple example is given. Commission received, add accrued commission. The account of accrued income will appear on the asset side of the balance sheet. What is cost of goods sold? Very important term. Opening stock plus purchases plus direct expenses minus closing stock. We are getting cost of goods sold. So next very important term, what is operating profit? It is also known as EBIT, income before interest and tax. So my dear friend, here some of the question is provided to you for your knowledge. Choose the correct option in the following questions. So you have just choose and then you test your knowledge. We are proceeding to the next part. Here again, another MCQ is given. You try and check the answer. Here, very small format of the balance sheet is given. So there are two sides, liability side and asset side. And asset liability side, capital, we are adding profit, deducting drawing, long-term loans, short-term loans, sundry creditors, bills payable, bank overdraft. And the asset side, furniture, cash, bank, goodwill, sundry debtor, land building, closing stock, etc. are shown. Another is what is marshalling and grouping of assets and liability. So there is a sequence, the system of presentation of the assets and liability. The assets and liability are arranged either in the order of liquidity or permanence. Arrangement of assets, liability in a particular order is known as marshalling. In case of permanence, the most permanent assets or liability is put on the top in the balance sheet, and thereafter the assets are arranged in their reducing level, that is permanency level. Note here provided in case of liquidity the order is reversed. So another is very important term. What is depreciation? Depreciation is the decline in the value of an asset on an account of wear and tear or passage of time. It actually amounts to writing off a portion of the cost of an asset which has been used in the business for purpose of earning profit. In the sense, in the balance sheet, the asset is shown at cost minus the amount of depreciation. So, what adjustment entry would be recorded for the following? So, my dear friend, depreciation, discount on debtor, interest on capital, manager commission, you try and check your understanding. So need for adjustment. Why we are doing adjustment? For the purpose of financial statement, it is necessary that all the adjustment arising out of accrual basis of accounting are made at the end of accounting period. So again, one more question is provided. State the meaning of outstanding expenses, prepaid expenses, as we have already discussed. So you do it at your own. So another very important things, we have used some of the terms here: interest on drawing, interest on capital, acceptance of bills, etc. earlier. So you just write one sentence about this and test yourself. Another is what is provision for bad and doubtful debts. It is a normal features of business operation that some debts prove irrecoverable. An attempt is made to bring in a certain element of certainty in the amount in respect of the bad debts charged every year against incomes. So here more terms are also provided. You write one word about this or one sentence about it and check your knowledge. So here the very brief introduction about the trust is given. It is dedicated for the welfare of the society. My dear friend, here some of the important aspects which are given. So we should promote, we spread, donate, and spread awareness about knowledge donation, blood donation, organ donation, goat donation, etc. So, my dear friend, enjoy accounting and learning. Thank you very much.